There we go. It's off now. I'd like to call to order the Metro work session of December 3rd, 2024. Georgia, will you please call the roll?
Yes, Counselor Wong,
Present.
Counselor Simpson,
Present. Good morning.
Counselor Rosenthal,
Present.
Counselor Gonzalez,
Present.
Counselor Lewis,
Present.
and Counselor Nolan,
Good morning. Morning.
and Council President Peterson.
Here, thank you. All right, we will move on to our agenda item for the day, and that is, before we get into our agenda items, can we please play the safety video for in-person attendees?
I'm Jason, and I'm an event production manager. Here at the Portland 5 Centers for the Arts, safety is our #1 priority, not only for our guests, but for our staff members. I'm at the Portland 5 Centers for the Arts, and you're at the Metro Regional Center. The council chambers are located on the 3rd floor. In the event of a fire or fire alarm, please exit through the door in the northeast corner of the room. Go down the stairway to the 2nd floor, exit through the main entrance by the reception desk, and gather in the courtyard outside that entrance. In the event of a medical or fire emergency, please call 911 and notify the security agent at the reception desk. The nearest defibrillator is mounted on the steps leading from the reception desk down to Grand Avenue. Thank you, and come visit us at Portland 5.
Awesome. All right, we'll move on to our agenda item of the day, which is the 2025-26 Budget Development Workshop. As we approach the end of the calendar year, it is time once again for Metro Council to begin the budget development process for the upcoming fiscal year. And as you know, the Metro Council sets the agency-wide vision for the annual budget. Our first step on that path is to share our council priorities as informed by a review of the regional economy and Metro's financial forecast. So here to present today is Marisa Madrigal, our COO, and Brian Kennedy, our CFO. So,
thank you, President Peterson. Good morning, Council. It's good to be here with you today. We have a presentation and then some comments, and then we'll open it up for questions and feedback. So, Brian.
Thank you. My name is Brian Kennedy. I use he, him pronouns. I am the Chief Financial Officer here at Metro, and happy to have a chance today to talk about our economic outlook and our 5-year forecast. Kind of as a reminder, we're going to start at the macro level, looking at what's happening in the economy, how that affects Metro, and then move into forecasts for our departments and themes, outlook for the budget process over the next few months. Let's go to the next slide. We will also spend some time talking about the budget direction that Marisa has given to departments, and then the overview of the council's process as it relates to the budget. Next slide, please. We're going to start with the economic outlook. I like to start at a macro level, looking at some national trends, and then zooming down into more detail until we get to the regional economy. So a number of these slides I've pulled from a variety of sources because Metro, we're lucky to have access to a lot of great information. So you will see that as we go through the slides. So next slide, please. So starting at the highest level, looking at the national economy, gross domestic product has been kind of, as this slide from our investment advisor states, impressing the critics. We have been exceeding expectations, and there is a lot of really positive news happening at the national level. I think everyone is aware that obviously we had a presidential election, and there are some potential changes on the horizon that might change some of these trends. But we're going into 2025 with a strong economy and a lot of positive things happening. Next slide, please. In terms of what that means on the ground, so consumption, how people spend money, is a really important driver for the economy. You note that retail sales in the kind of that last farthest right bar are down over the prior year. But what we're seeing is more spending on services and experiences rather than on buying things. Buying things was definitely powering the economy coming out of the pandemic, through the pandemic coming out. The good news about spending on services and experiences is for a lot of Metro, that is right in our wheelhouse. Portland 5, the zoo, Expo Center, Convention Center, those are services and experiences. So that bodes well that there's still a lot of strength in that sector of the economy. Next slide, please. This is a great chart that shows inflation, and it breaks it down into its core components: services, goods, and food and energy. The good news is that inflation is slowing. The rate of inflation is down. We're getting close to that Federal Reserve target of 2%. The bad news is that when you talk about inflation, it's the rate of change. And so it's still increasing, just at a slower rate, a rate that around what the Fed would like to see. But it means that those high prices that we experienced in 2022 and 23 are baked in for the most part. So there have been some decreases in core goods. Food and energy has been down, but a lot of those high prices are going to be a factor in the national economy, but also in Metro's budget going forward. Next slide, please. So now we're moving down one level of detail, looking at the state level. This is withholding at the statewide level for income taxes. And this is the trend of 90 days of collection to moving average, looking back to January of 22. You'll see towards the right of the bar, there was a dip around kind of late in 2024, and then it spikes back up. That's generally good news. That means personal incomes are growing. We're seeing some expansion in the economy. One note to take away is that spike, that kind of steep incline. Actually, Powerball and the Powerball winner in Multnomah County had a not insignificant impact on that particular jump.
Or did that person not have an impact on everything?
Well, one kind of interesting anecdote is the state lottery department declined to do withholding for Metro's supportive housing services taxes or the Multnomah County preschool for all tax. So we didn't see an impact in withholding from that person, though they have been informed of their obligations under those both tax measures. It's kind of an interesting anecdote. Next slide, please. This chart shows manufacturing hours worked. We don't often think about Oregon as a heavy manufacturing state, but we actually make a lot of things in Oregon. Kind of the one thing I've heard the various state economists say is one of the few things we don't actually make are kind of, regular cars, but we make trains. Some trains are manufactured here. Daimler, obviously, commercial trucks, semiconductor manufacturing. There's a lot of manufacturing that happens in Oregon, and that spike in hours is good news. This is at the state level, so it's not just in the region. But Portland, in a lot of ways, even for businesses that are not kind of core in the manufacturing business, they have ancillary work. They're connected to that. So strength in the state economy bodes well for the regional economy as well.
I'm sorry, are those per person or thousands, or what's the unit of hours?
Total hours worked, I believe.
Oh, wait.
I'm not sure.
One?
I think probably in probably millions of hours.
Okay.
Or maybe, I think you're right. It's probably on a per week average.
Okay.
It's quite a spike for Oregon in the last year.
And in a lot of cases, Oregon tends to outpace the national economy. In our recoveries, we tend to sometimes our trend over the last 20 years has been that we recover faster. We also fall faster in recessions. So we had a pretty steep decline there from 21 down to late 2023. But then that business has been coming back pretty strong.
So Brian, if I could ask on this slide, it's saying that people in manufacturing are working half an hour of overtime on average per week. Okay, so yeah, okay.
I think the thing to take away from here is the manufacturing economy is doing pretty well in Oregon based on the latest numbers. And that is a kind of an important bellwether for the state. Next slide, please. So now going down another level of detail, looking at the regional economy, we have a lot of positive trends at the state and national level. Oregon's employment growth is well below our historic norms and well below a lot of our kind of comparable cities. This is a challenge. This is something that's been in the news quite a bit. And again, in most of the last 20 years, Portland has been powering the rest of the state. And that's not as much the case right now. So this is something that we need to pay attention to and does have some impacts on Metro and support for the regional economy in general. Next slide, please. There's been a lot of talk about what some of the factors are. You may have seen this in the news. We get population estimates from two main places, from Portland State University and the census. So in 2022 and 23, we had a pretty big divergence between the PSU and the census estimates. Part of that is natural. They're using different data sources. And Josh Harwood, our Metro economist, and a number of people had suspected that PSU was being overly optimistic. The Census Bureau has early access to income tax records, so they can tell when people are moving. And in fact, PSU did revise their population estimate earlier this year, and that is the kind of dark blue line. The light blue line is PSU's previous estimate, and it does show that for Oregon, they estimated it down. The Census Bureau, I think we'll get new census data later this month. But some of the trends of strong population growth in the state, don't seem to be holding. It does appear that they may have stabilized, but we have some challenges there. Next slide, please.
For 23, are any of those based upon the census? Those last numbers, those are just projections.
Well, they're numbers from the census.
The census is the actual number, right, for 23?
Well, I mean, they're not.
Or 20. I mean, the census was done in 20.
Right, and then they have a process for updating that estimate.
So those are, okay. But there's no real data in the PSU or current PSU data. It's just based upon their algorithms, correct?
They look at a variety of data sources. PSU's looking at building permits. They get information from the cities. One of my first jobs as a land use planner was filling out those PSU population estimates for the city. So, I mean, everybody's using a variety of data sources to try to estimate population because we're not counting people every single year.
Right. Okay.
Just for context, am I seeing that we're talking about less than a half a percentage point difference? We're talking about 20,000 people different between PSU's adjusted and the census, right?
Yes, I mean, these changes are very close to zero. Yeah, but in the
Right, so the graph makes it look way more significant than it actually is. It's 1%, less than 1% difference.
yes, and the Oregon's long-term trend over the last decade has been population growth.
Right.
And I think the takeaway from here is we're looking at population change, within that noise bubble of around zero.
Right.
Next slide, please. One interesting stat the state has access to is surrendered driver's licenses. So people who have moved out of state. You can see in 2024, those numbers are actually pretty close to the historical average. The interesting thing is the state also has access to some data from the Cleveland Federal Reserve Bank, where they're looking at credit reports and credit applications. And so the Cleveland Fed data does show more outmigration from Oregon than the driver's license data is showing. And again, I think the takeaway from all this is the trend is definitely pointing away from what our historical average has been. Next slide, please. We also have some data on, it's limited data, but I think it tells a little bit of an interesting story that we have some new migration patterns within the metro area. So the chart on the left, this is MLS data. So sale price data from 2018 to 2022, and you can see that we had some, pretty significant increases in home sale prices over that 4-year period. But the biggest increases were in the suburbs. Some of the smallest increases were in the urban core. Then the chart on the right is showing for those same regions, the change in average sale price from 23 to 24. And again, that trend kind of holds out, that some of the biggest increases you were seeing were in the suburbs. You had some decreases in North Portland, Northeast Portland, and these are the categories that the Regional Multiple Listing Service uses. So how they define those areas might be different than how we would define them. But the takeaway is kind of consistent with a lot of data we're seeing, where some of the strongest growth in home prices has been in the suburbs, not in the urban core. Or Metro as a regional government maybe has less impact on us and might have more impact on the city and county, but it's an interesting trend nonetheless, and is a kind of a flip from what we've been seeing over a lot of the last decade. Next slide. Oh, is there a question?
No.
So getting to little even more detailed. So these are transient lodging tax trends. This is through September. So we're showing the two most important charts for me are on the left, the occupancy and then the average daily rate. And these are showing 2019 is the gray line, the top bar. So that 2019 was our pre-pandemic peak. And then the colored bars are the kind of post-pandemic years. 24, calendar year 24 is the kind of mustard colored bar. One of the couple important takeaways. So occupancy in 2024 has actually been up a little bit over 22 and 23. That's a positive trend. But then if you look at the average daily rate, the chart in the middle, that's near the bottom. So we're seeing room rates fall even as occupancy is up. So that is a real challenge in our transient lodging tax. And that's a really important funding source for our visitor venues. And is also an indicator of business coming into Multnomah County, travel and tourism business. Next slide, please. This is the forecast for transient lodging taxes for the visitor facilities trust account that's governed by the Visitor Facilities Intergovernmental Agreement. The blue line is actuals, the red is the forecast that the financial review team puts together. I circled the year where we crossed that pre-pandemic number. That is out in between 2030 and 2031 based on the current forecast. In 21 and 22, when we were doing this forecast, we thought we'd get back to pre-pandemic levels. 26 was our worst case scenario. But transient lodging tax recovery has really stalled out. And that's a significant problem, both as a source of operating revenue for the visitor venues, but also because there are two different mechanisms where we collect transient lodging tax, the Visitor Facilities Trust account, and then also a distribution from Multnomah County. And that Multnomah County distribution has a mechanism where when transient lodging taxes grow faster than the rate of inflation, that additional revenue goes into a fund for capital for the convention center and expo center. And under these scenarios, we're not generating any of that capital revenue. We really haven't generated any since the pandemic. So that is a really important way that we've paid for improvements, particularly at the convention center. And we're not projecting to have any of that pooled capital really in that 5-year forecast window.
Question, do you think, or does this data or this projection account for changes in what we might call national media attention or national media perception of the Portland area, which seems to have had quite a turnaround recently?
Yes and no. I mean, that's a factor we look at in building that forecast, but even as it's turned around, it has not, we're not seeing a change in actual transient lodging tax collections. Okay. So the national media attention has been more positive, or in some cases, the best case scenario is non-existent, but it's not resulting in more TLT being generated in the region. Okay. Next slide, please. So as a accountability mechanism, I like to share the key themes I saw last year and give myself a rating of how we're doing. So last year, one of our first takeaways is the economy was still strong, and one of the indicators of that was our SHS tax revenues. That one, it's really mixed. I think a shrug is probably the right rating. There are definitely some strong trends at the national and state level, but SHS tax revenues last year came in below forecast, about 6% below forecast. They were not, when the year wrapped up, they weren't as strong as we thought they were going to be at the beginning of the year. And if you look at collections in the current year, we're trending in that same direction and actually down a little bit. So yes, the economy is still strong, but not as strong as we thought. The travel and tourism recovery is a lot slower than expected and stalled out. That is definitely still true. That was true through last year. And we saw that inflation was easing, but that we would still see high interest rates. That definitely held true. We had one half-point rate cut in the last year, but I'm not sure anybody's forecasting significant rate cuts anytime soon. Next slide, please. So the takeaways going into this next budget cycle is, again, there's strength in the national and Oregon economy, and then some definite weaknesses in the local economy. One thing we're seeing is that some local conditions, particularly things like perceptions of downtown, are probably overwhelming some of those larger macro factors, like people spending on experiences and services. As we get into talk about the venues later, you're going to see some of this, that despite some of these strong national trends for spending in that categories, it's not manifesting in our budgets. The slow TLT recovery is an ongoing challenge. That's going to be a story for the foreseeable future. And then there's significant uncertainty across the board. The Oregon economy, I mean, there may be a US state that is not kind of deeply integrated into the global economy. I'm not sure which one that would be, but Oregon certainly has a lot of international trade partners, and significant changes in tariff policy could affect the Oregon economy. We don't know what that will actually look like. There's not a lot of federal spending that happens in Oregon directly. There's a lot that flows through to state and local governments, and so significant changes in federal spending could affect Metro. But again, it's really hard to see what exactly that's going to look like. Next slide, please. So moving into the 5-year forecast, some of the high-level themes. So like I mentioned earlier, inflation is lower, the rate of inflation is lower, but a lot of those increased costs are baked into budgets, both in terms of our labor costs, but also materials and services, goods and services prices. That's going to be a reality. We are also, we know that we're going to have a significant increase in our PERS employer rates for the next biennium, and we expect those increases to go up. There's been some coverage in the Oregonian of this lately, and this is affecting Metro as well. Talk about that a little bit more in a second. Again, venues, slow recovery in transient lodging taxes, but also attendance and event revenue. It's not come back to pre-pandemic levels in a lot of cases. Property taxes and excise taxes for Metro are stable, which is good news, but there are some risks there. Next slide, please. So I want to take a moment and talk about PERS employer rates. So the chart I have on the left is showing rates for, the blue line is tier 1 and 2 employees. So those are employees who were hired before 1997, 96. And then the OPSRP, Oregon Public, I'm not gonna get the acronym right. Basically, everybody hired after that point is the orange line. And this shows Metro's employer rate going back to the 2011-13 biennium. We had a nice drop in the 13 to 15 biennium, but that has not been the trend from that point on. We've seen a steady increase. We had a few years of relatively flat rates, and then we are going to see a significant jump in the next biennium, as will virtually every other public employer in the state of Oregon. And there are a couple of reasons for that. First, there's been a significant increase across the system in personnel costs. There's been a lot of growth in state and local governments, part of that driven by COVID funding, but also when you look at some of those charts of federal employment versus state and local government employment, all the growth has been in state and local government. I think as communities look at their local governments to take on responsibilities and challenges, we've seen growth there. One of the challenges with the OPSRP, the kind of tier 3 Oregon retirement system, is it was initially constructed to not have any unfunded actuarial liability, that payments into the system would be enough to pay for the benefits going out. That is not the case. OPSRP is accruing actuarial liability over time for a variety of reasons. One of those reasons is related to the second bullet, where our investment returns are the PERS investment returns were below their forecast. PERS is massively dependent on what happens in the market, both the stock market, but also kind of significant investments in private equity and some other real estate speculative investments. So when they do that actuarial assessment, they look at where the fund was as of December 31st of that year, and that ends up informing kind of the employer rates that need to come for the next biennium. So we saw it's about a 5% increase in our PERS employer rate, which is close to the average. There are some challenges in the future coming up that we won't get into today, but this is a trend that we're going to be talking about for the next several years. Next slide, please. So our key assumptions moving into the forecasts, we assumed inflation between 2 and 3% over the next 5 years. Interest rates are going to fall. That's good news in the situations where we're borrowing money, not as good news in the places where we are earning investment returns on our invested portfolio. And then again, ongoing increases in our employer rates. Next slide, please. So I'm going to walk through all the funds one by one. The slides are all formatted the same. So the chart on the left, our resources and revenues are in blue. Our expenditures are in red, going out over the 5 years. So for the general fund, the excise tax is stable, which is really strong really important. The excise tax is one of our most discretionary forms of revenue. If you think about the Metro budget as a whole, our current year budget is over $2 billion. So, but then you take that $2 billion, let's go down to the general fund. That's about a little over 200 million, 212 million. Then of that general fund, what's actually discretionary? That's about 23 million. So 2 billion down to 23 million, and most of that discretionary general fund is our excise tax. So most of the general fund is actually just recovering costs of our central services. So that revenue is relatively stable to the extent that our external departments are able to pay for those services. And as we go through the next few slides, you're going to see some areas where we have departments experiencing financial stress and that are putting some pressure on the general fund. In looking at the chart, the good news is that the general fund is relatively stable, and that's because most of the revenue coming in is excise tax, property tax that we transfer to the zoo, and then payments from external departments. So there's not a lot that can fluctuate there. Next slide, please. So the Planning, Development, and Research Department is technically part of the general fund, but we account for it separately because they have a lot of one-time money that comes in. So when you look at this chart, you'll see that for most of the years, that red line, expenditures are above the resources and revenues. And that's not something to necessarily worry about right off the bat, because one of the, there are a couple of main sources of one-time resources we have in the planning fund. First is federal grants. So we get grants to do projects. A lot of those grants are time limited. So we're planning on spending that money down over time. And then we also get money through TriMet that funds our transit-oriented development work. So those are one-time resources. The money comes in, but we spend it in chunks in the future. So part of what you're seeing here is that spend down of one-time money. We did assume going out over 5 years that we're going to get a similar level of discretionary grants. Some of those grants out in particularly years 3 to 5 of the forecast have not been awarded. We have a pretty good track record of getting those. But this is an area where we have uncertainty. If there's kind of significant changes in the federal process around resources that are available, that could put a big squeeze on the planning department. Next slide, please. Supportive housing services. This forecast, this incorporates our current thinking on SHS revenues. The current year was down over forecast, so we have readjusted the forecast. We're expecting lower revenues than our November 23 forecast. It's still kind of a historic amount of resource to fight homelessness and houselessness in our region. We're showing resources and revenues above expenditures, in part because the counties have stabilization and contingencies that they will be carrying through the life of that forecast, and we know there'll be some underspending. We are projecting, based on county spend down plans, that their carryover that's above their contingency and stabilization reserves will be fully spent down by fiscal year 27-28. Next slide, please. The affordable housing bond, the bond charts look a little bit different. We're showing expenditures as a bar and their fund balance as a line. So we're trying, really what we're paying attention to here is, in most cases for our bond funds, we have the resources in hand, and we're tracking how long is it going to take to spend down those resources to deliver the outcomes that were promised to voters. So right now we're projecting that final project costs will be expended in fiscal year 28-29. So you can see that fund balance goes down to functionally zero around that point. That we knew this bond would have kind of a long tail, and that's what's playing out, though we expect to have significant resources going out to projects next fiscal year. Next slide, please. The Parks and Nature Operating Fund, this is one of the places where we have some financial challenges. You can see that expenditures for all 5 years of the forecast are above the resources and revenues. This is what we would call a structural deficit. This is not a case of one-time expenditures exceeding revenues. We have a kind of a cost basis that's higher than our ability to fund it. So right now, Parks and Nature is working with the CO's office to resolve that structural deficit. We need to get those lines closer together. We don't know that we can necessarily get there in 1 year, but we're working on it, looking at their fund balance to figure out a transition to get those expenses and revenues aligned. One theme is that our local option levy revenues aren't keeping up with expenses. So our local option levy is all property taxes. Property taxes grow about 3% a year, particularly with inflation over the last 5 years. Our expenses have been growing faster than that. So we need to take some actions to get those lines more in line.
So question, so we're looking more at increasing the revenue at the bottom line, pumping that up, or are we looking at ways of just lowering the top line? I mean, which is systematic expenditure reductions.
We don't have a lot of ability to change the revenue line. The local option levy rate is set for 5 years. Our general fund, those discretionary resources are pretty much allocated. We do have some enterprise revenue we generate in parks through boat ramp fees, parking fees, reservations, but those aren't a significant portion of the budget. So most of the work needs to happen on the expenditure side.
Okay.
Next slide. So the Parks and Nature Bond Fund, we are projecting to do a second bond sale in the spring of 25. So probably we're looking at the March or April timeline, most likely. Our third and final bond sale, kind of loosely projecting around fiscal year 27-28. You can see that expenditures have ramped up significantly. But again, these funds are going to be on our books for quite a while. Some of the remaining projects like Local Share, our Nature Neighborhoods Capital Grants, those are some of the slowest dollars to be expended by our partners. So it's going to take a while for those projects to be complete. Next slide, please. Waste prevention and environmental services. So this chart, we're showing revenues above expenditures for all 5 years. As a utility, that is kind of what we would expect. This doesn't include any new capital costs for implementation of the systems facility plan. We're assuming revenue growth at around 5% a year. Again, remember, most of the expense in WPES is related to our operations. And those operations have contracts with CPI inflators in them. We're showing revenue above expenditures. In practice, as we set rates, we want to try to get those lines as close together as possible, unless we're intentionally trying to generate fund balance to fund capital projects. But when we do the 5-year forecast exercise, we're not trying to kind of exactly model rates out in the future. We know that we, on average, have underspending in WPES, so that's one of the big reasons we have that kind of gap between our revenues and expenditures, but we would try to keep that relatively close together. Next slide, please. Looking at so we're gonna move to the venues. The venue charts are a little bit different in that we show some actuals, and I think that's important for the venues because it's a really critical part of the story, seeing the impact of the pandemic. So for the convention center, you'll notice that the revenue and expense lines are pretty close together. Our forecast assumes that OCC can manage within their available revenues. They have some challenges. The future booking window is behind historical averages. They can tell you out over the next 5, 6, 7 years, on average, how many dates they should have booked for a particular year. And we don't have as many booked as we would expect based on our past performance. Some of that is probably related to kind of concerns around coming to Portland, but also part of it is there's been some change in the convention business, and some people aren't booking out as far as they used to. So that's a challenge, but their budget is large enough that they're able to manage within that. One of their big challenges is even though on an operating basis, they can manage that, they're not generating the net revenues that are critical for funding capital. So kind of tracking deferred maintenance and keeping up on those capital projects is going to be a challenge over the next 5 years. Next slide, please. So when we look at Portland 5, this is another one of our departments that has some significant challenges. So you'll notice that our expenses for the 5 years are above our revenues. We have a structural deficit here. This is something that this isn't new news. We knew pre-pandemic that we had challenges with P5, and some of those challenges were obscured by the pandemic when everything closed down, kind of everything was disrupted. And then we got, you'll notice the big spike in blue in fiscal year 22 is the Shuttered Venues Operator Grant. This is probably the only time in my career I'll be able to say we got millions of dollars from the federal government with literally no strings attached. Like that just doesn't happen. And it did, which was fantastic, but a lot of that resource went to funding major capital projects at Portland 5 and providing some operating support. And what we're seeing going forward is we've basically spent down that money, and the financial model of P5 has a lot of challenges in it. It had those challenges 10 years ago. And I think now it's just becoming really clear because I think for two reasons that it's a kind of a more significant challenge. So we've had kind of unusually large increases in costs, just like the entire country has over the last couple of years. But also we've had slow growth in attendance. Some of those revenues are not back to pre-pandemic levels, which puts a lot of pressure on P5. And then you add in political uncertainty around the Keller. It creates a whole new set of challenges. And I know that P5 is working hard on resolving that structural deficit, but it's not an easy problem to solve.
Mr. Chair, what assumption did you make about the Keller? Did you assume it would be off for a year? Did you assume?
We didn't assume any change.
So there's much more risk than this shows, it seems to me.
Yeah.
We didn't include it in the forecast because so far the discussions that have happened at the city have been frankly, theoretical. They haven't been tied to a timeline. They haven't been tied to a funding plan. And so, we've noted them as being, out in the ether, and certainly we're tracking, we're in there in discussions. But it needs to be a little bit more real for us to calculate the impact.
Thank you. And when you say the city, do you include PSU in that? Because the issue of two venues within a few blocks of each other serving basically the same audience, and then you add in Nation,
Live Nation.
Live Nation.
Live Nation. Anybody here want to claim that this region can support 3 auditoriums in the same?
I think
footprint?
that is a huge question.
Yeah,
That is a huge question.
thanks.
Were there other questions?
My question was basically the same as the uncertainty of the Keller, and could we project 1 or 2 scenarios and what would they look like? In other words, replacement versus revenue drop remodel, but you essentially covered it.
Great. Next slide. So the Expo Center, again, this is another area where we have a significant ongoing financial challenge. You'll notice the expenses are over revenues for all 5 years of the forecast. And for fiscal year 24, ended expenditures above revenues. There are a couple different things going on here. So first is that attendance and revenue recovery has really stalled. For the most part, revenues are still below our pre-pandemic level. That's an ongoing challenge. You'll notice this line is more wavy, kind of looks like a sine curve almost than our other charts. That's in large part the high years are Cirque du Soleil years where we see increases in revenue. And it used to be that those years would generate kind of significant net revenues that would help offset some of those down years. But that's not happening. And what's particularly concerning is that's not happening even as in the 5 years of the forecast, Expo's $1 million a year debt service payment has been fully repaid. So they have $1 million less in expenses going forward, and we're still showing net operating losses every year. So we have a significant structural deficit there that we need to address. And Expo is in much the same position as the convention center, where there's a lack of capital funding. They're obviously not generating the net revenues themselves to pay for some of that deferred maintenance. And we know that Expo has millions of dollars of need for capital investment. And the slow recovery of transient lodging tax means they're also not generating that pooled capital for investment. Next slide, please. Oregon Zoo, this is a better story. You'll notice those revenue and expense lines are pretty close together. The years where the revenues go down, that's where we expect decreased attendance due to significant construction projects funded by the bond. This is a similar pattern we saw with the last bond. When large parts of the zoo are under construction, we see lower attendance. The good news is there are years 25, 26, 25, 28, where those revenues are projected to be above expenses. Labor costs are a challenge. It's a very kind of labor intensive operation, and increases in those costs put pressure on our ability to generate net revenues, and that growing that revenue is going to require creativity and innovation. There are some natural limits on their ability to bring visitors in. You can't just grow revenue by growing attendance. You have to find some other ways to generate revenue. But in general, the zoo is well positioned kind of to address those challenges going forward. Next slide, please. The Zoo Bond Fund, this is very preliminary. The implementation plan is still being developed. So the expenditures are based on kind of some very early versions of their capital improvement plan. Obviously, we are going to sell some bonds this spring, so they'll have money. We're projecting another bond sale in 2 to 3 years, depending upon the pace of their projects. Kind of no big surprise here. Just know that we're going to be managing those projects and managing the cash flow so that they are not slowed down by their lack of access to capital. Next slide. So this is where I hand it back to Marisa.
Thank you, Brian. So as you can see from Brian's overview of the various forecasts, the picture across the organization is a mixed bag. Some departments facing more difficult challenges than others. It's not the worst year that we faced, but it's also not the best. As long as I've worked in government, structural deficits have been a normal perennial challenge. Sometimes a deficit occurs because costs are not tightly managed, but more often structural deficits occur simply because our revenues don't grow at the same rate as our expenses. Brian's PERS overview is a great example of the kind of acceleration of our costs that can necessitate action. Sometimes it may make sense to run a modest deficit on paper without reductions if you know, for example, that you're going to underspend a large percentage of your budget, or your forecast shows that you'll be bouncing back into the black the following year. But ongoing structural deficits left unaddressed can morph from gaps that are relatively simple to address into larger crises. My budget philosophy is to take a fiscally conservative approach, meaning address deficits early, because our community depends on us to provide stability in our systems. The larger the swing in a budget, the more disruptive it is to our work and our workplace. And I also always want to try to address the risk that is within my control, because there are risks outside our control that can combine with the deficit to compound the impact and complexity of our situation. To that end, I have asked all external departments and venues to submit balanced budgets for fiscal year 25-26, meaning that for departments with a budget deficit, they will also have to propose reductions and or requests for backfill in an amount equivalent to their deficit. Thankfully, next year we will have the ability to address these deficits through a combination of modest reductions, reprioritizations, and potentially general fund subsidy. But before I would recommend a budget to you that simply plugs a given deficit with our precious 22 million general fund, I want to make sure that we've done our homework to examine operational efficiencies, organizational structure, and opportunities for better efficiency in our administrative structures. My team and I will be doing that work with central services over the next 2 months and have asked them to look at cost savings and efficiencies. As we examine the potential trade-offs of proposed reductions or reprioritizations, we'll be aiming to protect essential compliance activities, maintain support to activities related to the council's strategic targets, equity metrics, and council identified priorities, such as Expo Futures, Willamette Cove, and future visioning. Over the next few weeks at our check-ins, I'd love to just hear more from you about whether you have other priorities or values that you'd like me to keep in mind. We can talk about them today too, as we put together the budget proposal for your consideration. As part of our response to this span of control audit, we will be asking departments to look at their organizational structures as well. While there's no perfect span of control, the budget is a great time to review the org chart, make sure that we have the right size structure to manage risk, support efficiency, and create career pathways, and deliver on our promises. Lastly, I've communicated to departments that the bar for new or expanded central services and general fund funded positions, programs and services is high this year. Because some departments may require additional general fund subsidy, I want to preserve our collective council's ability to fund critical existing programs and services before expanding to new areas of work. My overarching goal is to provide you with a budget proposal that is balanced, focused on keeping Metro's promises, and continuously improving how we serve the community. I also want to acknowledge that words like deficit, reductions, reprioritizations can be anxiety-inducing, and it is natural for folks to be concerned about how addressing these deficits will impact their corner of Metro. Unfortunately, in order to ensure we are on a fiscally sustainable path, there will likely be changes this year that impact some of our departments and some of our staff. My promise to you and to all of Metro is that we will approach these issues with the utmost care and sensitivity. So maybe we'll stop stop there and see if there's any questions before we go on to a process review.
Thanks. Counselors, questions for Brian and Marisa? Counselor Lewis, did you have anything? Just acknowledging your virtual presence.
Nothing in particular, thank you.
I said Counselor Rosen.
Oh, I didn't hear you. Sorry. Thank you, Madam Chair. Well, first of all, the big question is, there are capital projects and then there are capital projects related to maintenance and continued upgrading or restructuring. I guess I probably need a little bit more information on how we plan to address these needs going forward. As you know, we have things that we have planned maintenance and then some of them are capital, particularly in Expo, but stuff that we hadn't anticipated in, you know, the Keller and the Schnitzes we ran into this last year. So a little more information on that. And I have a comment. It would be helpful, since we have to compare across divisions, to the extent possible, I realize it's not always possible, use the same scales on the sides. In other words, in some cases, there was $5 million difference between bars. In some cases, it was 20 million. That presents as sort of hard to look at the red and green lines or the red and blue lines, depending on what was on there, and compare them and see the overall importance. In other words, sort of a $1 million deficit in parks is not the same as a $10 million deficit for the Expo. In other words, to some extent, we also have to think about the magnitude of these things. So I think that would be helpful, if that, to the extent that that's possible in the future. It makes it a little easier to compare across things in some cases, such as you showed with the last one, I believe it was the zoo. No, not the zoo. Where they were basically the same. And the other thing, it might be nice in some cases for projections to show error bars. That gives an idea of the range of uncertainty in some of these. Some of them are fairly stable projections and some of them aren't. So anyway, those are my comments and questions.
I think there are, like, conceptually, I don't disagree. One of the challenges in the 5-year forecast is we're not doing a 5-year budget. There is kind of a significant, well, in some cases, there are varying levels of uncertainty. And so part of what we're trying to do on the forecast is not kind of anchor on any specific number, but give a sense of the general trend.
Right.
And we also have wide variety in the size of our department budget. So say Expo at, I don't know, $7 or $8 million a year versus WPES at 140 million. So if you showed them all in the same scale, a lot of those smaller departments, you would lose any ability to see the difference because it's kind of a rounding error in the scheme of some of those larger budgets.
But do I understand the problems?
Thank you. Counselor Wong.
Yeah, thank you, Madam President. Just revisiting kind of the broader macro scenario. You know, I appreciated your, and it seemed like there was a lot of kind of like challenges our local economy is facing. So tourism is down. You know, we have you know, news coming out around kind of the major employers and layoffs over the last, you know, year or two. But it seemed like the local economy was relatively resilient. And I'm wondering if it's not kind of our major employers or tourism, what is the source of that resiliency? Like what sectors are doing well that's kind of like buoying the economy right now?
I think there are a lot of, I mean, even as some of our employers have major challenges and have done layoffs, these cycles are not totally out of scale with past kind of layoffs they've done. So that there's still a lot of underlying economic activity in apparel and footwear and semiconductor manufacturing. And even beyond those few firms, there are a lot of associated firms that are doing that work and services to support them. So a lot of the economic activity that we typically see is still going on. I think the challenge is, particularly in the case of Intel as an example, that their growth over the last 20 years and the times where they have made major investments have been real drivers of the regional economy beyond just Washington County. And I think one of the questions we're going to have to wait and see is, are they able to turn the corner and make some recovery? And, will they be that engine in the future, or will it be something else?
And like, what role does like small business and I guess just, other things that we're known for in our region, like how much do they contribute to kind of the local economy? Like, I guess I'm trying to get a sense of scale of like where we should set our policy and focus of like, these are areas that really need support or are driving our economy, and we need to specifically, do what we can to support those industries or sectors.
I think in general, and this is, I'll acknowledge, is probably more maybe veering into personal opinion than overall fact, but that government trying to pick winners and losers is really challenging, and our prognostication ability is pretty suspect. So our best course of action is trying to create an environment where all players in the economy have opportunities for success. And some of the things that I think have ended up being drivers of the regional economy, people didn't see 10, 15 years before that local powerhouse developed. So like, maybe let's not try to anticipate kind of where that growth opportunity is going to be, but rather continue to harken back to Metro making a great place. If we have a great region where people want to come and want to bring investment, that there's going to be some investment in expected places and some unexpected places.
Thanks, I appreciate that.
Councilor Gonzalez.
Sweet. Thanks, President Peterson and Brian. I always like hearing your opinions. Just want to say, I think having gone through a few of these now on the council, no huge surprises. Especially since I've joined, I know that our agreement and kind of operating structure of the P5 especially has been a hot potato between the city of Portland and the future of that, which I'm finally happy that we're addressing at a much more substantive level. So thank you to Marisa and the P5 team for leaning into that. I will say one surprise that did stick out to me was the discrepancy in a balanced budget for the parks operations. And like just 2 years ago, we passed a levy. So to me, that we're not, at least we didn't raise that levy to meet the needs that we probably knew we needed to. I guess it just doesn't add up there. I know we need to renew it on a pretty frequent basis. So I'm hoping that the council this council, the future council, whatever iteration, we can look to address that, because a $5 million gap is pretty significant. So I guess I don't quite recall when we were working on that, and I was on the council, so I take responsibility for maybe not asking the right questions about that. But yeah, I mean, I don't know what level of insight you can give to like what we can do to remediate and to get that back to where it needs to be, and kind of, yeah, and anything on that in particular.
I think in terms of the levy renewal, my perception is there was a decision around kind of the political viability of doing anything different, and so the safest path forward was a renewal at the same rate.
Yeah.
Coming out of the pandemic, in many parts of the agency, but Parks is no different. We had a lot of vacancies, a lot of projects that were on pause, and so it wasn't. A couple of years ago, it wasn't entirely clear exactly the trajectory in where they were heading. And I think, a couple things happened around some increased costs, both within their department from administrative costs, kind of investments we made that they contribute to, as well as kind of maybe adding some growth in programs that were not going to be sustainable over the long term. So there were, a number of factors that came together. And as we came out of the pandemic and things got back up to full speed, we got a clearer picture of where the department was. And now we need to take action to get them back on track.
Yeah. So in the meantime, between now and the next renewal, which I think is probably in 3 years, or it's every 5 years, right? That we need to renew it, or 7?
The
remember.
levies are for 5 years.
Okay.
So in the 4 or 5 year, I don't recall when the new levy rate goes into it, or which year. Summer here. 29 is when the current levy expires.
Okay. Thanks.
28
And-
expires.
And if I may interject, we've had discussions about moving to, or at least having the discussion of the viability of a parks district.
Yeah.
To stabilize the funding.
Yeah.
Do you want to take it from there?
Yeah, so I think there are a couple of things going forward. One, if we do renew the levy, I do believe that we are going to need to increase the rate.
Right.
The Parks District is a model that could provide some stability. It's also a huge political challenge. There would need to be changes at the legislature. There would need to be agreement, with our partners. So there's that is a long game
Of course.
scenario. I think the other thing that I want to share is that, we have added a lot of work to Parks' plate. We've expanded the land that we've had that we have. We've added more, and I think going forward, one of the things Director Blasher would like to do is when we add something to the plate, have that operational impact. So, every dollar that we spend with the bond is going to have an associated operational cost that needs to be taken into consideration. And I think, the combination of looking at our funding sources and what can do to be adjusted or to stabilize those, and also having a clearer picture of not just the capital cost, but the ongoing operational costs when we're making decisions, I think is going to be the key to the long-term stability of parks.
Yeah, thank you, Marisa, for saying that. And, from my conversations with John and the department too, I mean, the ceiling is really preventing us from even realizing more plans than we would probably like to pull to the future, which to me is like, darn. I mean, people love their parks. Like, it's one of our greatest assets and strengths as a region. So, I guess my question is, when I see a projected deficit of 5 million over 4 or 5 years, it adds up. So what steps are we taking to either like mitigate that, or are we, subsidizing that from the general fund? Are we not hiring certain positions, delaying things? Does the council need to be worried about, we're going to clean bathrooms less often, or create this environment that people love right now? Well, what kind of things should we be thinking about? And I trust our staff is going to be doing the work to maximize every single one of those dollars, but just want to be aware as we enter the next few years.
From a process perspective, our objective is to bring those set of decisions that we need to get parks back to a place of fiscal sustainability through as part of the budget process. So, and we'll talk in a little bit about the types of information you'll be seeing for all departments that give you a sense of the service level changes and impacts that are associated with those budgetary decisions.
Yeah.
Mm-hmm. Yeah, and I'll just add, anytime, I don't want to just narrow it to parks, but anytime we're looking at a deficit like that, we're going to look at organizational structure. We're going to look at the vacancies we have. We're going to look at, what is the work that we're doing? What are the top priorities? What do we need for compliance? What do we need to execute, our services? What do we need to make sure we're still living our values? Applying our racial equity lens. So kind of all of that stuff is on the table, and in the through the process of the budget, we'll be working with John to figure out, how do we bring those things together, and then proposing to you our plan to do that.
Sweet, thanks. Yeah, and I know, I mean, a few years ago, a lot of economic uncertainty, the middle of the pandemic. I hope that kind of putting that flag out right now, that when we do have to revisit that conversation, that we can lean into that. I mean, people want more service, right? Like they want shuttles to our distant parks. They want more interaction with Metro staff in parks and education programs. They want to see their rangers out there more often. And it's a big region, it's a big system. So I guess that I know that when we do get to work with the team, the parks team, we're like, well, let's do more. How can we do more? We're exiting the pandemic. People want to be outside, but then also I think realizing the fiscal constraints in these next few years. So I just wanted to draw a little bit of attention to that and talk about that. Another question I have, and this has been a constant trend as well for my time here, is just the PERS and impact on our budget. And just by the nature of being around for a longer time, getting to know. So who's in charge? Is that the Oregon Investment Council that is in charge of like the performance of that? And then we're kind of at the whims of the performance of the growth, or because I think I saw in your slide, you said we have not kept up with the market. And so I'm like, what's going on? What can you teach me?
Well, so there's a PERS board that's appointed by the governor that has responsibility over the whole system. The investments are managed by the Oregon Investment Council.
Yeah.
In a lot of years, they've done really well, but there is a particular function of or feature of pension systems where they have to do those actuarial valuations at specific points in time. And so they have to make an assessment about the assets the pension fund has at that point in time. And if that point in time happens to be one where the market is down or investment returns are down, that has a negative impact on employer rates for the next biennium.
Yeah. Okay. Do we have like because a few years ago, the whole like OPSRP and tier 1, tier 2 thing went into place. Do we have like a horizon, 15 years, 20 years, when we anticipate that will help us hit equilibrium? I feel like you've told me and I just can't remember.
The long-term projections we've seen from PERS are that that time of relief is well beyond my working career. And probably all of our working careers here, which is kind of sobering. Like it's not going to get better anytime soon. And we need to remember that PERS is one of the better funded pension systems in the United States.
Yeah, for sure. I'm not trying to disparage.
It could be, I just like as bad as it is, it could be much, much worse. And it is in a lot of states.
Yeah. Okay, thanks. I think that's everything for now for me.
Thank you. Counselor Nolan, and then Lewis, and then
Thanks,
Rosenthal.
Madam Chair, Madam President. I'd just like to reinforce a couple of themes and get to the finer point. Following up on Counselor Gonzalez's comments, as tools in preparing a budget, maybe the question is, well, for both of you, I heard you say departments will submit balanced budgets. But then I also heard something about filling a gap with general fund dollars. So the council holds the discretion to where to fill the gap. I hope that departments are being asked to submit budgets that are balanced with known revenues and not assuming that the general fund will back them up. I'd rather see the department heads and your, Madam Chief Operating Officer, ideas of where it would be least painful to reduce services than for us to speculate about that without the information. So am I understanding that correctly?
Yes, the direction on balanced budgets is the departments can't assume that somebody is bailing them out to balance the budget. They need to balance their budget. And then the COO has within the the ability of our, fairly constrained discretionary general fund budget, flexibility to think about different decisions, but nobody gets to assume that in their budget development process.
And will the council have access to those initial proposals? There might be a situation where we have different opinions about which ones to backfill and which ones not.
Well, I would certainly share with council when we present the budget that, this is, so in this process, when departments submit their budgets, they also have an opportunity to make requests for backfill. It may be general fund. They may have a fund balance of their own that's not general fund that they would like to request to, maybe smooth things out,
Sure.
bridge from, one year to the next. What I look at carefully in those questions is it a request, for one-time only money to just delay the inevitable?
Bingo.
Or is it,
Yeah.
is there actual ongoing funding or, so all those things will be considered. And I think, we'll be fully transparent with you all about, where the discretionary funds went.
Thank you. And then also to follow up, we can have a conversation if and when, probably when, it's time to propose a renewal of operating levies or other levies, not just in parks. But when we do propose, as we did with the operating levy, not to raise the rate for campaign, for appeal reasons for the voters, how do we establish that as a direction to live within, to develop programs and services that are fundable on an ongoing basis, or at least for 5 years within that rate? Because if we had only revenues of 10 million, but expenditures of 12 million, we were pushing it out. We were pushing the cliff out. And this member of council would like to be able to see what it would mean in terms of services not rendered if we don't push the cliff out.
So I think when we look at parks or any department, but I'll take parks because the levy isn't their only source of funding.
Right.
We have to kind of look at it holistically and all the puts and takes. But when we come back to talk about the next levy, we'll, give you various scenarios and be able to show you this is what we can do at this rate. And, typically with any proposal like that, we would also provide you with information about what service level that could support. To Councilor Gonzalez's question about, restrooms and is like how many park rangers are at different places. That's something that we will provide to you in this upcoming budget. Try to give you a sense of like, what is the trade-off of these decisions? What is the risk of backfilling or not backfilling in the context of what services we can provide or not?
Great, thank you. One last comment. I'll join Councilor Rosenthal in requesting that the graphics that are presented are designed to inform what decision needs to derive from them. And if the decision is about which of the different departments that are being subsidized by the general fund have gaps, then from a decision maker's point of view, I want to see graphs that put them on the same scale. Because if I'm focused inwardly on the department, I may need to have the smaller departments stretched out to see the changes in it. But if I'm stepping back and looking at where should the general fund provide support, I want to know how big the gap in each department is, on scale together. So think about the audience is what I'm suggesting.
I understand, appreciate that. Just One note for particularly the venues, they don't receive any general fund subsidy currently. It's really just parks and planning that do.
Okay.
Thank you. Counselor Lewis.
Sure, thank you so much. I appreciate this discussion. And I do hope that some of these threads come back as we not only establish and set the tax rate, but also in future conversations around the budget. We generally spend about an hour on each department, and I would hope we would have a little bit more time this year because we need to have these larger conceptual conversations in addition to evaluating program and how the organization is using resources department by department. My takeaway from this presentation is really that we have to think critically about our enterprise funds, and the enterprise funds were not really highlighted today as what they are, which is siloed parts of the organization, and how do those pieces fit together through central services to our overall approach as Metro, both as an employer, but also as a purveyor of public service. We hold ourselves to a set of standards around accessibility, around equity, and around being a place that Portlanders and people in this region can be proud of. And I think some of that, particularly in this current context, means we are a welcoming place. And that takes resource. So I think we're going to be challenged to maybe have the conversation this year around what does it mean to be an enterprise fund in this current environment, not only fiscal, but socio-political. So Brian, I don't really have a set of asks related to these slides, but I guess if you could reflect on the budget more towards the enterprise funds versus those other funds that are considered organizational budget areas. I would appreciate that.
That's an interesting question. When I think about the budget, the reality is that most of Metro's budget is siloed, not just the enterprise funds. For the most part, our budget is not fungible. What we spend in WPES cannot be spent in the convention center or P5. So from an enterprise perspective, our main enterprise funds are the Solid Waste Fund, WPES, the visitor venues, including the Oregon Zoo. And they're all very different. And they also all, for the most part, receive some form of tax support. So there's a combination of, they have a kind of an element of public service as well as an enterprise business function as well. And the factors that are driving them and on both the revenue expense side are really unique. So it's a little bit hard to talk about them consistently. There are some themes, but they all have unique opportunities and challenges.
Great, thanks. I might have more questions offline, but appreciate that response.
Counselor Rosenthal.
Thank you, Madam Chair. Just two questions, one specific and one a little bit more general. The specific question has to do with what Councilor Gonzalez brought up about the parks. We've talked about for several years about the idea of how we get on the stable funding, and we've talked about a park district. Will there be some place in the budget for specifically pursuing an answer to this question as the direction going forward during this next budget cycle? In other words, will we either put it in parks or put it in operations, that we're actually going to try and reach out and start the process of evaluating this? So that's the specific question. The general question is, it strikes me that we will be seeing a government the likes of which we have never seen before. And so it would seem, and there's always economic uncertainty, but it seems the economic uncertainty would be sort of on steroids at this point in time, particularly since we're not exactly going to have favored nation status. But I guess the question is, how conservative should we be in making these projections, should we presume sort of a reasonable conservativeness, or should we be doing much more of a economic turtle forecast?
I think I don't know. I think my sense would be we tend to kind of err on the more conservative side, and in the prior Trump administration, I think that served us relatively well. So I wouldn't recommend a dramatically different approach. In terms of the ability of the federal government to directly influence our budget, that is most pronounced in planning and development. And so I think they're going to have to pay close attention to what's going on there. But I also think it's important to remember that for a lot of the talk about government spending, there are a lot of red states that also depend on federal transportation money for investments in their region. So I think the likelihood of a full scale federal pullback from that type of investment is probably unlikely, but we're going to see less investments in things like the climate work we've had funded at the federal level. Some of the priorities and investments might not align well with our regional values, and I think planning is going to have to work through that. But I don't think this is we need to. I don't think that the sky is necessarily falling from a budget perspective.
All right, seeing no other counselor with raised hands, I guess I just would want to weigh in and say, thank you for pointing out that we already have some existing ongoing priorities at the council level. And if you were to repeat those again, they would be?
Yes, the Expo Futures, Willamette Cove, future visioning. Make sure.
That was it. I think that was it. Yeah.
Your strategic targets, equity metrics.
Yeah, and in terms of major projects, the first three are probably major projects. The last two are still internalized, and we're trying to figure out what those are and where they go. Correct.
Yes, and I think the direction that we've given in the past, and that we would continue to share with departments is, the strategic targets in those areas of housing, economy, and the environment are sort of broad lenses. That if you are proposing to eliminate something in those areas, it's something that we would look very carefully at.
Perfect. Thank you. I think that helps in terms of our next conversations when it comes to prioritization. But I do think while you're being optimistic for a CFO today, I mean, I understand we're not in a dire circumstance overall in our budget, but it seems like it would behoove the council to take a deep breath and make sure that we finish what we started, which was one of our priorities from COVID times, and make sure that when we start prioritizing other things, that they are minimal impact on a budget. So again, I would ask that everyone really think about how we interact with the budget this year and try to refrain from budget notes that have any kind of financial impact or have any financial impact and resources from the staff at this point, because I think we need to balance out and figure out how do we finish these big items and get them moving, because they are very important to the region, as well as the ongoing issues that we're going to still continue to discuss around P5 with the city of Portland and the supportive housing service measure and affordable housing. So just keeping all of those balls in the air, I would just ask for a little restraint and trying to put all that into perspective for this year. And hopefully we can get a better idea into the next year of whether we want to start anything big and new and get a little bit more definition around what that might be. So that would be my request for the council. Councilor Rosenthal, did you have anything else to add?
Oh, no, just left it up.
Okay, awesome.
A little process to go.
Yep.
To go over. Next slide, please. Next slide. One more. There we go. Okay. Okay, so just a quick process overview. Department budgets are due to me January 10th. The proposed budget to you is published April 4th. The first budget presentation will be April 10th, and then your deliberation begins April 10th. To your point, Councilor Rosenthal, about sort of like uncertainty, there are several months between today and when the proposed budget is published. And so we'll have updated information. I think some of the uncertainty that we're feeling is going to be more known. And certainly, the council has the ability to make significant changes if we need to, if the forecast significantly changes. And we have been in that situation before in the pandemic when things significantly changed in March, and basically the proposed budget was moot. So we had to redo it. Next slide. So we have
So Cinnamon is passing out, we have a couple different forms that we have developed, the direction of Council President. The first one is a department proposed budget overview. So this is going to be a new way we're testing out departments sharing major changes and impacts of those changes in their budget. So this will come to you after the proposed, or potentially part of the proposed budget, or in those department presentations, to give you an overview of what's changed, what's different. And then the second form is a counselor direction and idea form. So this is trying to create a little more structured way to gather council feedback about the budget and changes or direction that you want to see. So these are kind of new this year, variations of things we've done before, but hopefully will provide us a way to give you kind of more structured information about each of the department budgets that you see.
Thank you. And timeline for getting homework done, since you've just given it to us?
Come on.
So our normal process, council ideas can come as late in the process as kind of in May. We would love to get those ideas early, but I think to the point where you have an idea that you want to explore, start checking in with the COO and staff. We can have staff work with you on part of what we're trying to do is make sure that you have the staff resources to really flesh these ideas out. And so it's kind of a less of a scramble at the end.
Awesome. Thank you. We have some questions. Councilor Lewis and then Councilor Gonzalez.
Sure. I wanted to just reflect that upon review of these materials, I think they are the best tool that we have been given in my time. So obviously there were many budgets before the last 6 years, but thank you for preparing these tools so thoughtfully, both for departmental use, for access by the public, as well as real appropriate and provocative lines of questioning for us as counselors to get our thoughts organized as we go through budget, so that we're actually engaged and we are understanding the levers and the many dominoes that fall with every decision that gets made within departments. So double thumbs up on these budget materials. I look forward to using both of them. The other kind of thought I have, and this is something Councilor President Peterson and I have talked about, but we are beginning this budget conversation very grounded today in economic reality, but we are not doing the grounding with each other. That has normally been, I think, more of a facilitated conversation with like a hot, medium, and observe level of category around projects and priorities. And I think I would like to further develop what our expectations are, not only in this year, where we all kind of know where our joint priorities are with housing, but the opportunity to better solidify our expectation for next year so that we can begin those conversations essentially as soon as this budget process wraps up, so that we're ready to hand it off since the departmental budget exercises already have begun. So I'd like to have further conversations about how we can better solidify our council process on the front end. Thank you.
Thank you. And to that point, Counselor Lewis and I are working on a joint resolution to bring to you for your input on what you want to see as the proposed process through a normal process. Like what would that mean to you? Just so we can be clear about expectations. So. Counselor Gonzalez.
Cool. Yeah, let's start off by doing a double thumbs up to Counselor Lewis's statement and look forward to some of that work.
No drugs, no shrugs.
No shrugs. You know, my first question / request, I wonder, and this might get into like this process that we want to continue streamlining, but it would be great if we could include some kind of like rear view mirror kind of practice where we look at like in a 5-year rolling basis, what have been the council budget notes and amendments, what has been completed, what's still going, you know what I mean? Just so that we can see a history of that. And I think that would be really helpful for new counselors especially to see, oh, these are the kind of initiatives, this is the kind of work that has happened. And I think that's important because you know, sometimes, you know, there might be really good work that happened and then that institutional memory can be lost. So it's more of an institutional memory practice than anything. For folks to get a sense of the extra projects that, to be fair, the CO's office has to take on to implement. So one, I would love to see that. Two, a request that I would like to for future budget conversations. So Brian, this is more for you and your team. I would love for us to get like a more agency-wide picture on how we are spending our money in terms of like environmental practices, procurement for, you know, DI, COVID firms, kind of additional layers of impact that we're seeing. And I know that the departments do that kind of breaking down, but I want to see just like some general agency-wide metrics that we could potentially, that can help us understand how we're advancing some of our goals in that sense. So connecting it back to the strategic targets, and anyway, would love to see something like that.
Good. That would all be good input for the resolution. Awesome. Anybody else? All right. Well, thank you. Good first conversation. Looking forward to the rest.
Thank you.
It's in good hands. All right, counselors, can we move on to Chief Operating Officer Communication?
That was my update. Thank you.
All right, counselors, I just want to call attention to a letter that is going to go up from me to Mayor Wheeler and the commissioners, just in support of the Oregon Zoo's proposal to purchase the property next door, which used to be the Children's Museum, in order for the Oregon Zoo to be able to take advantage of more land on the property itself in the future. So that's okay. Head nods. Okay. Thumbs up. Sounds good. Counselor Rosenthal.
Yeah, thumbs up. I think it's a good idea. I think it might have been more powerful if it had come from the entire council.
It can, if you would like it.
I think she's powerful enough.
Okay.
I think it says a lot that we're sending a letter, so I like it. Yeah, I mean, I appreciate the effort taken for this.
No, thanks. It's a good opportunity for us, so we can celebrate. Anybody else?
Sure,
Counselor Lewis.
Sure. Thank you so much. Counselors, yesterday, the Supportive Housing and Services Oversight Committee met. Normally I give a little bit of a more off the cuff summary of the meeting, and this one felt particularly powerful. So staff have helped me prepare some notes a little bit more objectively and not relying on my memory. But I think it's important to know that yesterday there were two main items of discussion. One was the SHS reforms, as well as the committee finalizing work for their annual report. In terms of the committee and their discussion and concerns regarding proposed SHS reforms, there were comments that this process feels rushed and premature. And they have asked for more clarity on the rationale behind this timeline. We tried to provide it both through staff and myself, given the urgency around housing. But it was still a theme that is important to reflect back to you as council. Then another major theme for you all to hear is that Metro and counties are not in alignment. They pointed to a lack of clarity and discrepancies in funding figures in reports and various presentations, emphasizing the need for better communication and transparency. And this committee discussed potential funding reductions for counties. Members repeatedly stated, there is such great work happening. Why would we make cuts? The following action items came out of the conversation. The committee requested a work session. Some members requested a joint work session with staff from Metro and the 3 counties to better understand the funding numbers and discrepancies. The committee is contemplating a letter to us at council in order to solidify their feedback, because they don't, I think, always trust that these oral reports are adequately conveying their feedback. So we might receive a letter. Public opinion updates. The committee has questions about public sentiment and would like to see the public opinion research and a summary of comments we've received to date. And again, they are questioning clarity on a ballot measure process. And a individual committee member asked whether a ballot measure vote is required to change just the oversight structure. So the committee is talking overall about the budget and the concerns around the larger package, but in particular, as the current overseers, they have put some particular thoughts out around oversight. And in terms of the work that they are doing on the annual report, obviously there are the 3 reports from the 3 counties. Chris Smock, as a consultant, spent some time with the committee yesterday, and she authors the report as well as the cover letter that then gets edited in a group process. And the group, I believe, meets again next Monday. So a week from now, I will have yet another report as that group continues to do the work. Thank you.
Thank you, Counselor. And when those further discussions happen, and obviously I can make myself available to make sure that we've got all the electeds in the room that we need to give the Oversight Committee any information. Counselor Gonzalez.
Yeah, ditto. Thank you, Councilor Lewis, for representing the council on that. Just mine is a more cheerful tone, I guess. It's Giving Tuesday, so make sure that you support your favorite nonprofit today. Money goes a long way, and you know, the spirit of philanthropy and generosity in our region is another special thing. So I'd love to go around and ask everyone who they're going to be giving to today, but I won't. I'll ask you one-on-one.
Anything else for the good of the order? All right, with that, we are adjourned, and our next regularly scheduled meeting is Thursday, December 5th, 2024, 10:30 a.m. Thanks all. See you there.